Hello everyone, welcome to my channel. This is CA Sneha Challa, and in this video we will be covering section 138 of Companies Act 2013. So before we start, let's understand what is this internal auditing. Okay, so before you go and give board exams, okay, so suppose imagine that you're going to give your 10th class board exams. So before you go and give your board exams in your school, you'll be writing pre-board exams, right? You'll be writing pre-board exams and your own teachers will be correcting your papers so that when you go to the board exams, those teachers who are external to you are going to correct your papers, right? So that you do not make any mistakes there. Your internal teachers are going to correct your papers and are going to suggest you, are going to tell you where you're doing mistakes, how to improve, and how to be a better person and how to score well in your external exams, right? That is the same reason why internal audit is conducted in a company also. Okay, so before the external auditor comes and checks all your proceedings in the company, internal auditors are going to correct any mistakes or any errors or anything so that everything is proper and your mistakes are being corrected in a timely manner. So that is the reason internal audit is being done in companies. Okay, so let's just understand in brief what are the functions of internal audit. Okay, so they're going to check if your internal control system is monitoring properly or not. Is it identifying the material misstatements properly on time or not? So they're going to check if the internal control system is being effective or not in the company. They're going to check your financing activities. They're going to check your accounts. They're going to check your records, and they're going to see if everything is proper or not. They're also going to check if the company has a proper risk management system in place or not. Because whenever you have any risk, if you don't manage it properly, there are chances that a company might not be a going concern anymore. So only once you have a proper risk management in place, that is when you can flourish, right? They're going to check if you are being following all these laws and regulations properly, if your company is being governed properly or not. And also they're going to check how are the operating activities, the primary activities in the company, how are they being run? Are they proper or not? So all these are some of the functions of internal auditors. So moving ahead, now we'll be starting with section 138 with this little knowledge that we already took. So section 138 here talks about, first let's understand to whom all this internal audit applies. See, internal audit is a very costly affair. So every company cannot afford an internal auditor and cannot spend so much time on getting this internal auditing done because the cost will be more for them than the benefits. But if it is a big company, the benefits of internal audit is more than their cost. So to whom all this section 138 is applicable? It is applicable to all the listed companies. Also, it is applicable to unlisted public companies, provided their paid up share capital is more than equal to 50 crores, their turnover is more than or equal to 200 crores, or, so all this is or, so any one of them you come into, then internal audit will be applicable to you. You will have to appoint an internal auditor. Okay. Also, outstanding loans, borrowings from banks or public financial institutions, if they are more than or equal to 100 crores, this is any time during the previous financial year. So in any day or on any day, if my outstanding loans or borrowings are more than or equal to rupees 100 crores, then I will have to appoint internal auditors. Also, if any of my outstanding deposits are more than or equal to 25 crores any time during my previous financial year, then section 138 will be applicable to me. But moving on to a private company, in a private company's case, only these 2 points will be applicable. Paid up share capital and outstanding deposits will not be applicable. So for a private company, if the turnover is more than or equal to 200 crores, or if the outstanding loans or borrowings are more than or equal to 100 crores, then section 138 will be applicable. Now we need to understand who can be these internal auditors. So a CA, a cost accountant, or any other professional. So any professional, if the board thinks can be the internal auditor, can be appointed as an internal auditor. Okay, so moving ahead, as I just told you, we have discussed the functions about internal auditors, right? So the internal auditors will carry out all the functions that we have just seen, and all the activities of the company are being properly carried on or not will be checked by these internal auditors. Again, these internal auditors may or may not be the employees of the company. Now, what does this mean? This means that even employees of the companies can be internal auditors. Like how I told you, when you're writing your pre-board exams in your school, your own teachers are going to correct your papers, right? So that is the reason, connecting these two. So an internal auditor can also be the employee of the company. Okay, it is not necessary, but they can be the employees also. Moving ahead, internal auditors can be individuals, partnership firms, or any body corporate. So body corporate can also be your internal auditors. Moving ahead, as we just discussed, a CA or a CMA can also be internal auditors. Now, the CA or CMA, they may be in practice or they may not be in practice. So as you know, the external auditors should be a CA in practice. But here, internal auditors may be in practice or may not be in practice. So a CA who is an employee can also be an internal auditor. Okay, moving ahead, the rules of this internal auditing are fixed by the central government. And as you know, the external auditor gives his report to the shareholders. But internal auditor gives his report to the board because board is appointing him. Okay. Also, if a company has an audit committee, then audit committee along with internal auditors will decide the scope of internal auditors. How scope is nothing but what all works do they need to do? How do they function? What is the periodicity? Periodicity is nothing but if the internal audit should be done once in 6 months, or what is the period they're going to cover. So all these things are going to come, and what are the methods that they're going to use to conduct this internal audit will all be decided by the audit committee along with the internal auditors. But suppose there is no audit committee in a company, then the board along with internal auditors will decide all these things. Moving ahead, this is not relevant anymore, but it is just said that as soon as this section came to the existing companies, which were there before this section came, they get 6 months time to comply with section 138. So I hope I made section 138 simple. So if you like this video, make sure you like it, subscribe to my channel, and also make sure you comment on this video, and any doubts that you have, you can also leave it in the comment section and I will get back to you. So with this, we end here. Thank you, everyone. Have a nice day.